Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
Oil is soaring today as the Iran war has entered a new phase. The attacks are escalating. They're now targeting key energy infrastructure throughout the Gulf. Iran is attacking energy sites, defying Trump's call for restraint. Israel striking back on Iran's energy sites. Taking a look at how the market's handling it. So far in stride. Again, we're down to lows for the year. The S&P 500 is down 60 basis points, down to 65.85. The Dow Jones Industrial Average is down 340 points this morning to 45,883. The Nasdaq's down 160 points, down to 21,992. So they're all about 0.75% down. The VIX is moving sideways right around 25. The volatility index isn't spiking right now, so things are very controlled. Bitcoin's off 2,000, sitting at 69,247. And the 10-year Treasury sits at 4.26%. For people like myself, I stay in cash or cash equivalents when I'm getting 4.5%. 4.25% is pretty close. When money markets and cash equivalents drop to under 4%, money gets moved into the markets. So historically, it's been a pretty easy read on how to make money or where money should go. Some rate cut hopes came out of yesterday's Fed meeting, and the rate cut hopes are significantly pushed back amid sticky inflation. We saw a producer price index for February get above comfortable levels on inflation. What's interesting to note about that, that's pre-war. Rising oil prices today. Iran strikes energy infrastructure sites throughout the region. Micron is sharply lower despite stellar beat and raise earnings report. Strength today in energy stocks, and that is about it. I guess I'll throw out one happy fact. 3 billion robots, estimated global humanoid robot population by 2060. 62% of them will be helping out around the house. Bank of America still predicts they'll be outpacing car ownership soon enough. Costs are projected to fall quickly from about $35,000 on the lower end for a humanoid model today to about $17,000 by the year 2030. Oil prices spiked this morning after an attack on the Iranian gas field. Global oil prices hit $111 a barrel yesterday. The Trump administration is taking steps to keep oil prices in check, including lifting the Jones Act shipping restriction for 60 days. A massive structural blow to the global energy market happened today. Qatar Energy CEO stated that retaliatory Iranian missile strikes have knocked out 17% of Qatar's LNG export capacity, an outage expected to last between 3 and 5 years. This is now no longer a temporary disruption. It's now a long-term supply crisis. The capacity loss on that facility is about 12.8 million tons per year of LNG. Qatar expects to lose roughly $20 billion in annual revenue. The fallout includes 24% drop in condensate exports and a 14% drop in helium output, further tightening secondary markets. We need helium to make semiconductors. We're seeing inflation. We're seeing long-term disruption now. ExxonMobil is a direct partner. They hold a 34% stake in one of the damaged trains, they're called. There's a company in the United States called LNG Cheniere. Its ticker symbol LNG. Their shares up 6% as it becomes the primary hedge for European buyers now. There's a company called Next Decade, ticker symbol NEXT. Their shares up 16% on speculation that U.S. export projects will accelerate. VG, ticker symbol. Company's name is Venture Global. Their shares are up 14.5%. Currently have the most uncommitted gas to sell immediately. So even when a missile strikes a natural gas facility in the Middle East, there's investment responses. It's weird. It's odd how Wall Street works. The geopolitical weight of this can't be overstated. The CEO said he expressed shock that the attack occurred during their holy month of Ramadan, calling it an unprecedented move by a brotherly Muslim country. This follows Israeli strikes on Iran's South Paz field earlier this week. While LNG is used primarily for power and for heating, the disruption has dragged the entire energy complex higher. The Pentagon confirmed a request for an additional $200 billion in emergency supplemental funding for the ongoing war. A war the president didn't go to Congress and say, can we do this? Now the president and the Pentagon is going to Congress saying we need more money. $200 billion is in addition to the $11 billion already incurred in the first 14 days. This is roughly 25% of the entire annual U.S. defense budget requested in a single emergency ask. Defense Secretary Pete Hegseth defended the figure at a press conference, stating bluntly, it takes money to kill bad guys, while noting the final number could fluctuate based on the pace of the campaign. Despite GOP control of both chambers, House of Representatives and the Senate, Congress is having a fierce debate about this. Critics on both sides of the aisles are questioning the end game and the impact on a national debt already strained by recent tax cuts. The one big beautiful bill has lost much of the momentum that it would have created due to the Iran war. Now, if you're looking for some companies to benefit from $200 billion, you'd probably look at Lockheed Martin, Northrop Grumman, General Dynamics, L3 Harris. So Lockheed Martin makes the THAAD and the PAC-3 interceptors heavily used in the Gulf. It's trading near a 52-week high. Year to date, it's up 36%. Northrop Grumman is a primary contractor for anti-radiation missiles. Hit by short supplies right now, up 27% year to date. Huge beneficiary of the $200 billion replenishment fund. General Dynamics, they make munitions and naval systems. They're seen as a safe haven play. They're up only 6% this year. L3 Harris, they provide the high-tech communications and sensors for the air campaign. Up 24% year to date. They're expected to see massive order increases in the bill. The urgency of the $200 billion request follows a series of escalations over the last 48 hours. The United States is reportedly preparing a Hormuz operation involving the USS Tripoli to break the Iranian blockade. Caspian Sea strikes for the first time Israeli forces struck Iranian missile ships and shipyards on Iran's northern coast. Iran's retaliatory strikes on Qatar, Kuwait, and Saudi Arabia have effectively turned the conflict into a regional energy war, keeping oil prices at their highest levels in years. I told you it was going to be a heavy kind of show today. 9.3% spike in interest at CarMax for individuals looking for electric vehicles, hybrids, and plug-in hybrids. Interesting, when gas prices go higher, people want EVs. Gasoline prices rose to about $3.88 per gallon in the United States, an increase of 25 cents from a week ago and 96 cents from a month ago. California gas prices have hit $5.62. The WNBA stars just got paid. Average salaries will quintuple to $600,000 from $120,000. Minimum pay will surpass $300,000 from $66,000. Each team's maximum cumulative pay will start at $7 million, up from $1.5 million. Tesla's robo-taxi program disclosed its 15th accident in Austin. That amounts to a crash every 57,000 miles, which is 9 times the rate of human drivers. Those are not good numbers. Speaking of not good, the National Highway Traffic Safety Administration said it's expanding its probe into Tesla's full self-driving system. Basically, they're doing an engineering analysis covering about 3.2 million Teslas, the majority of the vehicles that are on the road in the United States. The agency is focusing on Tesla's degradation detection system, which is meant to recognize when its camera-based technology cannot reliably perceive the road and prompt drivers to intervene. Available incident data raises concerns that Tesla's degradation detection system, both as originally deployed and later updated, fails to detect and or warn the driver appropriately under degraded visibility conditions such as glare and airborne obscurance. In the crashes that ODI has reviewed, the system did not detect common roadway conditions that impaired camera visibility and or provide alerts when camera performance had deteriorated. Tesla CEO Elon Musk has long argued that the company's self-driving approach does not require the expensive LiDAR sensors used by rivals such as Waymo. That is not a good thing for Tesla. The stock is counting on robotaxis and full self-driving. If they were to have to go back and start over manufacturing with LiDAR, it would be problematic, to say the least. Uber is going to invest $1.25 billion in Rivian in a new robotaxi deal. Rivian surged more than 9% in pre-market when that news was announced. Ticker symbol RIVN. Uber is going to invest up to $1.25 billion through 2031. The deal will begin with an initial $300 million investment, and Uber will purchase 10,000 autonomous versions of the R2. Uber will have the option to buy 40,000 more in 2030. Underline the word option to buy more. The R2 is Rivian's smaller, less expensive model. It's set to roll out to buyers in the second quarter of this year. Rivian no longer expects to be adjusted EBITDA positive in 2027 due to an expected increase in R&D spend associated with the acceleration of its autonomy roadmap. Uber, which has more than 20 autonomous vehicle partnerships ranging from Alphabet's Waymo to Baidu, has become a dominant robotaxi force, especially in headlines. Micron reported an outstanding quarter with beats on sales, earnings, and guidance. Shares are getting hit, probably over management's comments on spending. The maker of memory and storage products is being prudent as it figures out how much to spend versus how much to pay down debt. The contracts it is offering are confusing. It didn't mention much about its capital expenditure plans, leaving people confused. Deutsche Bank raised its price target to $550 from $500. KeyBank went to $600 from $450. It's currently a $430 stock, and those two price targets are $550 and $600. That's a significant movement. Micron's position is as a key beneficiary of the AI-driven memory boom. Gross margin surging to 75% as tight supply and strong pricing drive outsized profitability. Data center segments led the upside, fueled by accelerating demand for high-performance memory, also known as HBM. Management views investments as necessary to meet structurally higher demand. So Micron is pushing their 2026 capital expenditures above $25 billion, stepping it up further. So if demand starts to sate, go sideways, go lower, will there be a glut of DRAM, and we'll be back to being a commodity. Right now, we're talking about high bandwidth memory as a premium. One day in the future, we'll be talking about, that's a commodity. When there's too much supply, and you can't tell the difference between one stick of memory versus another stick of memory, that's when it won't be good. But right now, it's very, very good. Let's take a break here. I'll come back, give you more insights into the markets for today. Maybe a little investment philosophy and some other things to get to on the list today. You can find me online at robblackshow.com. That's robblackshow.com. I'm Rob Black.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
We are a few hours in now, and the markets have basically stayed where they are, going sideways, not making much of a move right now, with the S&P 500, the Dow, and the NASDAQ all down about 0.75%. Gold, silver, Bitcoin are moving lower as safe haven luster fades following the Fed decision yesterday. It doesn't look like we're going to get interest rate cuts this year. They're projected to do one. But with oil soaring, we're going to see some inflation come in. Mortgage rates jump further above 6% as the Fed is warning on inflation, and the bonds are responding appropriately. There's always stories like this. Some of them are more PR than others, but a U.S. trade tribunal preliminary ruled that Apple's current Apple Watches do not infringe patents owned by Masimo, rejecting the medical monitoring company's bid for a renewed import ban on the tech giant's smartwatches. Apple altered its watches to circumvent an import ban that the U.S. International Trade Commission issued in 2023. An ITC judge agreed with Apple in a ruling made public today. Masimo will eventually license the technology, I believe, that's in question to Apple. You know, a cute workaround, and blood oxygen levels was the sensor that's in question, which was super important, believe it or not, during COVID, as when your blood oxygen levels dropped, it was a sign that, you might be in trouble. But you used to be able to read it directly on the watch face, and now to get around it, Apple lets you do the reading. You don't see the reading, but then it goes straight into your Apple phone or your Apple Health app. Intuit Workday and software is a hot trade right now. Cash flow positive software companies, once doomed to obsolescence by AI, they're the hot trade right now. Oracle's up 1.2% today. Workday's up 0.25%. Intuit's up 1.5%. Salesforce up just fractionally. Some of the uptick is likely linked to the better than expected weekly jobless claims numbers that came in earlier today, which eased concerns about a recession brought by the most recent monthly employment report. Amidst all the chaos and uncertainty of the Iran war, during the fog of war, steady cash flows and predictable short-term outlooks of software as a service stocks, they have an appeal, especially since they've sold off in what was once an expensive market. January new home sales plunged to the lowest pace since 2022. 2026 started the year with some optimism that the Fed was going to cut interest rates 3 times and thus get the 30-year mortgage under 6%. That's not happening now. The Iran war is in focus. Sales of newly built homes in January were 11% lower than January of 2025. The median price of a home sold in January was $400,500, a decline of 6.8% year over year. These are new homes. Inventory of new homes for sale hit a 9.7-month supply. Prices should come lower. That's a lot of supply out there. I've never lived in a new home. I wonder if I'd like it. It's an odd thing to say out loud, but I say a lot of things out loud on this show that are a little odd. Meta is going to cut back on third-party vendors in favor of AI for content enforcement. Meta is beginning the long rollout of more advanced AI systems to handle content enforcement-related tasks like catching scams and removing illegal media. The announcement means Meta will begin to shift away from third-party vendors and contractors that have historically handled basic content moderation. It's Meta's latest effort to use its hefty investments in artificial intelligence to streamline its business and its operations. Meta said they'll still have people who review content. These systems will be able, though, to take on work that's better suited to technology, like repetitive reviews of graphic content, or areas where adversarial actors are constantly changing their tactics, such as with illicit drugs or scams. So more jobs disappearing. I'm a little bit nervous that my kids are going to get in one of those jobs, or think they're getting into one of those jobs that can disappear. Trying to push them into the trades, if that's what makes them happy. That's the damnation of all this. You got to end with that phrase, whatever makes them happy. Crypto.com is laying off 12% of its workforce. Its latest company to cite AI and job cuts. The CEO said the cuts were to roles that do not adapt in our new world. A growing number of companies have cited AI for mass layoffs. What you're going to find after the Gulf War, and it's looking increasingly likely that we may have to put boots on the ground, and that will freak people out if we want to get control of the Strait of Hormuz. Who knew? It doesn't look like we went into this war with a great plan. You're going to see a lot of companies, this is my point, like Crypto.com, lay off employees to right-size companies. They'll blame higher oil or AI. The bond market's reacting slightly today to news that just broke that Trump is signaling the Department of Justice should continue its Jerome Powell probe, complicating the Warsh Fed nomination, which again plays into less likely that we're going to get interest rate cuts. Jerome Powell is obviously looking at the job markets and the price of oil and how it's going to complicate inflation or stagflation. Where you get a stagnant economy, you get a weak job market, you have inflation. That's a bad combination. It's one of the combinations that honestly makes me cringe. Several memory companies are following Micron's earnings. Seagate slipped 3%, Western Digital fell 3%, SanDisk down 6%. Micron's down 6% right now after a blowout quarter. Align Technology, the maker of the Invisalign products, jumped 7% today following an Elliott Investment Management has built a significant stake in the company. It's an activist company that wants to look for ways to boost the stock price. Alibaba, their shares are down 5% lower today. Weaker than expected fourth quarter results. The e-commerce giant's top line came in at 284 billion won, below expectations of 290 billion. Mining stocks are getting hit. Silver and gold miners tumbled alongside the sell-off of the precious metals. So Newmont, First Majestic Silver, Kinross, Core Mining all dropped roughly 9%. Anglo Gold Ashanti down 12%. Wow, gold. Taking a look at why the miners are getting hit so hard. And gold's down 5.7% today to 4,614. Again, pulling the interest rate cuts out of the economic discussion. When you do that, you're cutting back on one of the catalysts of inflation. So gold down 5.7% today, 46.14 an ounce. Silver down 8%, sitting at $70.76 an ounce. Barclays hiked their price target on Johnson & Johnson from 217 to 234. Strong U.S. pharmaceutical sales growth over the past 5 quarters. NVIDIA's price target was taken higher at Raymond James from 291 to 323. Analysts upped their estimates to reflect CEO Jensen Huang's forecast of 1 trillion Blackwell and Vera Rubin generation chips orders through 2027. Intuit was named a top pick today at Morgan Stanley, saying valuation looks attractive. Third quarter earnings could lead to estimates revisions. Recent web traffic data shows improving momentum. The firm has a $580 price target on the shares. Now, again, that's part of what's working today are cash flow positive software companies. Intuit's one of them. Oracle's having a good day. Intuit's having a good day. Workday's having a nice day. That's a tough one to say out loud. And Salesforce. BTIG lowered their price target on Nike from $100 to $90. Top line profile looks muted ahead of earnings later this month. UBS also cut Nike with a $62 price target going all the way to $58. Those are two very different price targets. UBS at $58 on Nike and BTIG at $90. Interesting to see how OpenAI is shipping AI everything that's not ready for prime time, and Anthropic is just trying to perfect one or two things. The two AI titans are trying to grow revenue as fast as they can, but they have different strategies for releasing products. OpenAI and Anthropic are locked into this battle. Anthropic was founded by former OpenAI researchers who left to realize their alternative vision for safe AI. OpenAI is boasted of releasing a new feature or capability roughly every 3 days. So if you take a look at what OpenAI has with their models, they've got Codex, an AI coding tool. They've got Atlas, an AI-powered web browser. They've got Sora, a text-to-video generation app. Operator, a web browsing agent. ChatGPT agent, another web browsing agent. Whisper, which is an automatic speech recognition system for transcription. DALL-E, which is a text-to-image generator. ChatGPT is an AI-powered search engine. ChatGPT Pulse is an AI-powered news app. Like, do you see how many different products they have? Claude has Code and Claude Cowork. Cowork is a desktop AI agent. And I would say right now that Claude is the winner in public perception of who's going to be the AI large language model powerhouse. Keep in mind, at one point in time, search technology in the U.S. had a lot of players like Lycos, Excite, Ask Jeeves, Google, and Microsoft's Internet Edge. And all those search engines and all those search web browsers, they kind of boiled down to one or two players in the end. Same thing's going to happen with AI. Eli Lilly is reporting encouraging trial results for its next generation GLP-1 shot. Patients taking the highest dose of what's called retatrutide, 12 milligrams, lost 16.8% of their body weight after 40 weeks, more than its current bestseller, tirzepatide. The results also showed significant reduction in blood sugar levels. Lilly's tirzepatide, sold under the brand names Zepbound and Mounjaro, is currently the most sold drug in the world. Company sales have now outpaced its top rival Novo Nordisk, which was the first to bring a GLP-1 to the market, but has seen sales decelerate as competitors have muscled in. I have a Pints and Portfolio coming up Saturday, April 18th, 11:30 to 1:30 in Sunnyvale, California. It's a good opportunity to sit down with a financial planner. I bring two of them, two of my favorites, Ryan and Julie. I'll buy the beer, and we'll go through the content. For investors with more than $500,000 in investable assets, you get a portfolio evaluation, a preliminary financial plan, which is amazing. You'll see if you're on track to retire the way you want to, or do you need to change up a few things. Managing your portfolio on your own can be downright overwhelming for some investors. It's very informal. Meet and greet. Saturday, April 18th in Sunnyvale. Sign up at robblackshow.com.
What's the best way to choose a financial advisor? Download our guide at robblack.com. That's robblack.com. Powered by EP Wealth.
There's a lot of noise going on Wall Street right now, and one of the things that I like to do is try to teach you some things. For instance, are banks signaling a recession? I watch banks. I know I don't talk a lot about big banks on this show. I haven't talked a lot about them in the last 30 years of doing this show. The show was originally called 2020 on Wall Street. And I had to change the name because too many people thought I was an optometrist. That's funny. So big banks are taking a shellacking right now, and they're kind of a canary in the coal mine. Let's talk it through. How much worse does the private credit problems get for major financials? The sector bears watching it are ready to call it, a massacre. A lot of people in private credit are saying, yeah, they lent out too much money. And yesterday I talked about how maybe they weren't choosy enough with some of the firms they were lending money to. So private credit is a way to get sometimes double-digit yields, 10% to 12%. I'm not talking like 99%. The way it works is you have a company and you go to a bank, you knock on their door, and they say, we don't really lend money to people like you. We do mortgages and car loans and personal loans. And so they go, okay, who does? And private credit is one of those things. Because I have good cash flow, I've got a friend who asks me a lot. Do you want to fund this deal? You'll get a 10% return in 3 months. I'm like, what? No. I always say, is there paperwork? Because I know that he's doing a lot of hard money loans for people in real estate. Just not my thing. U.S. bank stocks are a useful coal mine canary, providing market-based warnings about serious problems in the U.S. economy. You watch the transport stocks, and you can Google Dow Jones Industrial Average Transports or Dow Jones Transports. And if they're hitting 52-week highs, it typically means the economy is going to be doing well over the next 6 months. Banks give us a little bit of something too. Private credit is the primary catalyst for volatility. The 8 to 18% slide in major bank stocks like JP Morgan, Bank of America, Goldman Sachs is being driven by specific pockets of worry in private credit, tied towards AI displacement, highly indebted software firms that may lose market share to AI-driven competitors. Private credit is the primary catalyst for volatility with economic sensitivity, companies struggling with a recent spike in oil prices tied towards the Iran conflict. And ultimately, they've become crowded trades. Nicholas Kolos of Data Truck Research argues that the bank stocks are now more important to watch than tech or oil. Historically, banks exhibit statistically terrible performance at the very start of every economic downturn. If the current underperformance continues or worsens, it's going to signal that investors have officially abandoned the resilient economy narrative that we started the year with. The signal versus the noise, the 100-day rule, the S&P Bank ETF, its ticker symbol is KBE, is up 2.2% over the last 100 days, while the S&P 500 is essentially flat. The recent weakness is viewed as a temporary dislocation rather than a broader sell signal for the U.S. economy. Now, this also could be a false positive. So even though I say watch the bank stocks, you got to remember it doesn't work every single time. This could be a mirror to 2023 where regional bank failures caused a scare but no recession. The Silicon Valley banks and a couple other. Now, in 2008, it was a systemic collapse. While bank stocks always suffered during a recession, as you've taken out loans and can't pay them back, and they have to write those off, they frequently give off false positives where they drop sharply without an accompanying economic contraction. Regional banks are a flight to safety. That's interesting. Regional banks are currently holding up better than the massive Wall Street firms that I started telling you about at the start of the segment. Why are regional banks doing well? If JP Morgan, Bank of America, Goldman Sachs, Morgan Stanley aren't. A flight to safety, because regional banks are where we started this conversation about private credit, where you own a company, you go in, you say, I need to borrow some money. And regional banks are like, no, we don't really do that. Now, regional banks have significantly less exposure to private equity and private credit markets that are currently under fire. Strategists suggest a flight to safety within the sector, moving capital away from complex global financials towards simpler regional models. Walt Disney today held its 2026 annual meeting of shareholders with newly appointed CEO Josh DeMero outlining the company's next chapter. It's weird. I've now been alive long enough to go through 3 long-term Disney CEOs. And you could almost say 3.5 because the current one who just left came back. I particularly remember Eisner and Iger, the E's. DeMario mentioned ESPN today when he was talking about the company, calling it an indispensable daily touch point for millions of sports fans. He says, we want to capitalize on our strengths by focusing on coming together as one Disney to deliver a more connected, personalized, and immersive experience to our consumers. A little kind of, I hate using this phrase, but douchey statement. We want to be one ESPN and one Disney.
Behave yourself.
I still like that. To me, that whole, it's a kind of a corporate kumbaya kind of thing. Let's keep moving through. Microsoft is weighing suing Amazon and OpenAI over that $50 billion deal. Everything in AI is not going smoothly. Microsoft, a longtime backer of OpenAI, is weighing legal action of the latter's $50 billion deal with Amazon, tied towards its Frontier AI product, arguing it could violate a key clause in their exclusive cloud deal, requiring OpenAI's models to run through Azure. Amazon and OpenAI said they found a workaround. Microsoft disagrees. I bring this up only because I find Sam Altman to be an annoying CEO. I think he's a brilliant guy. But the way the media, and I'm part of the financial media, handles OpenAI, we're like, that's a very circular deal. Good golly, when are they going to start actually showing us revenue? Show us the money. So I find this just, did he really get himself into a situation where he promised to work with another company and worked with a different company? Hey, baby, I love you. I want to marry you. Well, then why were you kissing another girl across the street? Meta is shutting down its VR social platform called Horizon Worlds, talking about things not always working out.
Now, Meta.
So Zuckerberg changed the name of the company from Facebook to Meta, and now they're shutting down the metaverse. Maybe his next pivot will be to name Facebook like AI Social. Number one AI Social. Meta announced today that it's shutting down Horizon Worlds, the virtual reality social network for Quest VR headsets that once was a key piece of the metaverse. He sank billions and billions and billions of dollars into the metaverse. He showed us incredibly stupid looking demos where he was hyped and pumped up and a bro on steroids about how cool it is. Look, I'm going to get a connection with my childhood friend and we're going to play chess online. Awesome. And he'll be like just sitting right next to him. Except for the virtual 3D social network where we had avatars didn't have legs at times. And when they added legs, it looked weird. So that's shutting down. And Wall Street has to say, thank God. Not ready for the 21st century, a virtual reality world where we're no longer posting our ugly picture kids on Facebook or Instagram. We're posting them in a virtual reality world, which you don't want to see them in Facebook. You don't want to see them in Instagram. You definitely don't want to see them in a virtual reality world of metaverse. Now, Meta's also doing another thing. God, they need to change the name, right? Now it stings of like a cancerous touch. Like, oh, that didn't work out. Meta Platforms launched the Creator Fast Track program to attract established influencers to Facebook and engage younger users. Facebook is so uncool that influencers went elsewhere, like TikTok and YouTube. Now Facebook's like, come back, or Meta's like, come back. Now Meta has Instagram. I would argue that Instagram's nowhere near viral enough to compare with YouTube Shorts, YouTube, and with TikTok. Creators in the 3-month program will be able to earn money based on followers on outside social media platforms. Those with 20,000 and 99,000 followers on Instagram, TikTok, or YouTube can now make between $100 a month to $450 a month. It sounds like desperation. It smells like it. Anthropic's enterprise tools are killing it. The AI firm now captures 73% of all spending amongst companies buying AI tools for the first time. I begged my spouse, please, please, please love me. No, that's not what I begged her. I said, please, please, please stop using OpenAI. I use Anthropic and its Claude is awesome on my phone. And it shows me like, if Apple's going to do this, why am I going to pay $15 to $20 a month to use Anthropic's Claude? Apple really has to get it right sooner rather than later. Speaking about getting it right sooner rather than later, Morgan Stanley says robo-taxis could help Tesla sell more cars. Duh. We've been saying that for quite a while now. Now, Morgan Stanley visited Tesla, or Tesla visited Morgan Stanley and talked about unsupervised robo-taxi rollout. This is an incredibly crowded field all of the sudden. You're seeing Uber and Lyft make deals with car companies. Car companies make deals with autonomous driving. NVIDIA is jumping deep into the field with press releases now saying we're going to have robo-taxis the next 2 years, if not sooner. Morgan Stanley sees a cost advantage. They estimate Tesla's robo-taxis could cost about 81 cents per mile to run, cheaper than traditional ride-hailing and rival autonomous services, with costs falling further as purpose-built vehicles like the Cybercab scale. $415 price target out of Morgan Stanley on Tesla. That's about 4% higher than where it is today. You can find me online at robblackshow.com, Twitter, Rob Black Show, YouTube, and other places where you find financial media. Where you get your financial podcast, look for Rob Black Show. Tell a friend. I'm Rob Black.
The markets are more volatile than ever. Inflation, interest rates, global uncertainty. If you have $500,000 or more invested, ignoring it could cost you your future. At EP Wealth Management, they offer a free preliminary financial plan, a chance to identify potential risks in your portfolio before the next downturn hits. Get insights from Chad Burton, CFP, and Rob Black, trusted voices in financial planning and retirement strategies. They'll help you spot hidden risks, rebalance thoughtfully, and uncover opportunities to grow and protect your wealth, even in turbulent times. Their goal? To help you feel more confident about your financial future during uncertain times. Don't wait for the markets to decide your future. Schedule your complimentary preliminary financial plan at robblackshow.com. That's robblackshow.com. EP Wealth Management. Plan smarter, live better, no matter what the markets do. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.